Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Brianna McGurran, Loans Analyst with Forbes, Advisor, a trusted destination for unbiased personal finance advice, news, and reviews to discuss the 2020 U.S. national election impact on student loans, best practices to manage them during COVID-19, and how to set up for the 2021-2022 school year. Brianna, it's great to see you again. We certainly have a lot to unpack. Welcome back to Trade Talks.
Thanks so much for having me.
And Americans hold more than $1.6 trillion in student loan debt. If higher education is constantly being promoted as a path to success, why are we swaddling people with so much debt? That $1.6 trillion figure is almost as much as one of the COVID-19 stimulus packages.
Absolutely. I mean, there's no question that Americans hold so much student loan debt. And one of the reasons is that the cost of college has increased exponentially over the past several years, and policy really hasn't caught up. So for instance, the Pell Grant, or the maximum Pell Grant that you can get from the federal government if you're a student with financial need, is about $6,300 for the 2020-2021 school year. That's not going to get you very far when you look at a big private nonprofit university whose sticker price is maybe $50,000. So it can help if you are planning to go to a community college and transfer. Basically, as a consumer, it's really up to you to make the decision that is right for you based on the amount that you can spend on college and the amount that you are comfortable paying back in student loans after you graduate. Our advice is to try not to take out more student loan debt than you plan to earn your first year out of college. So say you're in a career where you'll probably make about $50,000 when you graduate. Don't take out more than $50,000 over the course of your 4 years in school. That will typically give you a student loan payment that you can generally afford.
Now, many people have lost their jobs because of the pandemic and have to prioritize putting food on the table. What's the best way to manage student loan debt during COVID-19?
If you're a federal student loan borrower, you've been lucky in that you've gotten this payment holiday from March through the end of December. And that means that you're not required to make federal loan payments at all right now. And also your interest isn't gathering. Their interest is not accruing at the moment. So you're going to owe the same amount in January that you owed in March with no extra interest on top of it. That's great news for federal loan borrowers. Hopefully it's giving you a little bit more breathing room over this period of unprecedented uncertainty and anxiety for a lot of people. If you're a private student loan borrower, a lot of private banks have also given people a little bit of breathing room, typically in the form of a COVID-19 specific forbearance. But private loans are still accruing interest in most cases. So borrowers who have taken this payment holiday are going to owe more when it's over. Now, something to think about is in January, we don't know what's going to happen if this payment holiday is going to be extended or not. So if you're unsure that you can afford to make your payments starting in January, it's really important to call your student loan servicer now. Get in touch with them as soon as possible. They're the company that collects your student loan payments, and tell them, what can I do to ensure that my payment is lower next year? Because I'm just not sure that I'm going to be able to afford what I was paying before COVID-19 hit. So if you're a federal borrower, you might be able to sign up for an income-driven repayment plan, for instance. You have a lot of options.
What happens if I actually need more college aid?
If you need more college aid, reach out to your college now. Be vocal, tell them that you're looking for additional financial aid because your situation has changed. So maybe you lost a job, your parent lost a job, you're just not able to pay the same amount that you could. Financial aid offices are prepared to accept those requests. You know, they know that people are struggling right now. So typically you'll have to fill out something called a special circumstances form, maybe provide some documentation to show that you've lost a job or that your parent's situation has changed, and then they can actually reevaluate your financial aid package.
Now, clearly student loan debt will be top of mind for many voters. We're talking about tax policy, healthcare policy. Will we get a stimulus package? And to the best of my knowledge, student loans hasn't been included in that. And it's like, you can't even get a fresh start when you've put all this time and energy into going to school. So as we're thinking about this in the process of voting, what can we expect from each candidate?
Yeah, it's a great question. So you can look at Joe Biden's policies on his website. He's got a pretty extensive student loan policy area where you can see what he's proposing. And his main ones are that he would like to streamline and expand that income-driven repayment program that I was talking about. So he would like for every federal student loan borrower to pay 5% of their discretionary income after the first $25,000 is taken into account. And at that point, after 20 years of payments, your loan debt would be forgiven. Now, borrowers can opt out of this program if they want to, but everyone with new loans would end up in this program. President Trump has suggested something relatively similar in his budget proposal to Congress for 2021, which you can think of as sort of his blueprint for student loan policy. And he has suggested, though, that borrowers pay 12.5% of their income and that they pay over 15 years if they're undergrads, over 30 years if they have loans from graduate debt. So those are the two big differences between the candidates. And you can also see some differences in the way they're treating public service loan forgiveness. That's a program where public servants working for nonprofits or for government can pay their loans over 10 years time and then get tax-free forgiveness at the end of it. President Trump has proposed canceling that program. Joe Biden has proposed making it a little bit easier, actually, for people to get it based on the requirements of the program right now.
Well, let's look ahead to 2021 and 2022, which is going to be so interesting because a lot of people have pushed ahead their start dates instead of going to 2020 because they want that college experience. I can only imagine how competitive that landscape is going to be. So what are best practices for anyone looking to pay for college during the 2021 to 2022 semesters?
Yeah, absolutely. So the most important thing is to fill out your free application for federal student aid, the FAFSA. All of us who have gone to college or grad school, we know this form, we know it well. And that's really important to fill out because that means that you'll have access not only to federal student loans if you need them, but also to grants from your state, your school, and the federal government that you don't have to pay back. So make sure to fill that out. It's available right now for the 2021 school year. It became available on October 1st. And if you haven't filled it out yet, do it as soon as you can because a lot of aid programs are first come, first served, which means the faster you fill it out, the more likely you'll have to actually get this financial aid. And then the same rules apply that always have. Try to max out federal student loans before you go for private loans because as we've seen with COVID, there are more opportunities for help from the federal government if you need it. And generally the repayment terms and programs are a little bit more generous.
All right, Brianna, great advice as always. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.